All right, switching gears, a sweet quarter for Hershey. The snacks giant smashed profit estimates for the first quarter. Hershey also lifted its full-year profit outlook, which was above analyst estimates. Joining us now is Hershey CFO Steve Voskuil. Steve, always great to get some time with you. Another good quarter for Hershey's and your team. What were some of the drivers?
Yeah, tremendous quarter, and we're happy to be in a spot where we can take up our top line and bottom line guidance for the year. Really, all parts of the portfolio performed well, and probably the biggest driver underneath it was continued strong consumer resiliency in spite of a lot of volatility in the economy. We have a portfolio, fortunately, that has both cherished brands and also brands that are accessible and affordable despite the economic circumstances. And I think those two things in particular were drivers for the first quarter.
And Steve, what are we seeing in terms of volumes versus price, and what kind of price increases you guys are taking?
Yeah, so coming into this year, in the back half of last year, we announced mid to single digit price increases across most of the portfolio. Of course, it varies a little bit by brand, and that's playing out in the market now. But despite that, we had a very strong volume in the first quarter. We had about 4.6% volume growth attributable to the stronger consumer response despite that pricing. Now, I'll say we're watching the consumer very closely. We're very sensitive to consumer behavior, and at the same time also watching the P&L and cost inputs to ensure we have enough profitability to reinvest behind the capacity needs we have, the consumer needs we have, and our people.
Steve, do you see consumers trading down to some of your more cheaper offerings?
Right now we're not seeing that. We're fortunate that about 25% of our portfolio retails for about $2 or less, so a significant portion can really reach any economic circumstance. And as you know, we've got such a multitude of pack prices and alternatives for consumers. So far, we're not seeing that, but it's something we're watching closely.
Steve, you guys recently laid out your longer-term growth projections at 2 to 4% sales growth on an annual basis. Considering if you go back pre-pandemic, it was more on the lower side of that. Where's this extra growth going to be coming from for Hershey?
Yeah, we've seen it across the portfolio here in the last 2 years, and we've talked about it in some of our previous discussions. Core confection continues to perform very well. We talked about the strength in the Reese brand, for example, a really strong performance during pandemic that is continuing here into the first part of this year. But we're also seeing great growth on the salty side of our portfolio. Skinny Pop, Pirates Booty had fantastic quarter. And Dots Pretzels, which we acquired at the end of last year, is on fire right now. Where that business has doubled its retail sales this quarter versus the same quarter last year. Now represents 17% of the pretzel category. And I think those combined performances between salty and the core confection business are going to continue to deliver to the higher end of that range, at least in the near term.
Steve, I've talked to a few folks on the street that cover Hershey, and they commend you guys for the growth you're putting up, but have noted that valuation is starting to get a little rich. Why do you think your company deserves that valuation?
Yeah, I think, again, we have very unique and differentiated brand positions. We have brands that consumers love. We have brands that people want to reach for in times of a challenge and also in times of celebration. And one of the things we've seen in the last 2 years in particular was just how precious seasons are to our business and to consumers. And I think we play a special, emotive, and unique role with consumers in those special family moments. And we see that continuing. We despite some of the economic pressure that consumers face, we are still in affordable indulgence. And we think that gives us a unique spot to continue to perform differentially.
I've read a lot of your earnings releases through the years, Steve, and I don't recall the team calling out strength in Jolly Ranchers and Twizzlers as you did today. Is there some form of revival of those brands underway?
Jolly Ranchers, particularly the gummy space, is doing really well. I think I mentioned this in the last quarter update, the new Very Berry flavor. That product itself is up 65% year over year quarter, so fantastic performance there. In fact, so much performance on the gummy space, we're going to be bringing out a new gummy here in the next quarter in the Lily's brand, so a reduced sugar gummy in Lily's to take advantage of the growth we're seeing in that sweet space.
Do sugar gummy. All right. Thanks so much, Steve. Good to see you. Steve Voskuil is the CFO of the Hershey Company. Appreciate it.